Question is, what'd you miss?
Record highs across U.S. stocks luring more investors, but is this still a hated bull rally? We'll give you the evidence and let you decide.
Plus, economist and Columbia professor Jeff Sachs joins us to discuss a new kind of globalization.
And Walmart boosts its forecast after second quarter earnings top estimates. We'll look at what the results mean for these two rivals in retail.
We begin with our market minutes, and the dollar fell, bonds rose, and oil entered a bull market. And if you look at equities, it was kind of meandering for much of the day. We did finish higher when it actually, the closing bell rang.
Meandering is right, but I would say it was very much a continuation of what we saw after the Fed minutes yesterday. Yesterday we saw stocks go green, bond yields go down, and I think essentially it was a slow motion continuation of that today.
Yeah, I think meandering is probably a pretty good word for stocks, but slowly sort of meandering upwards. I want to start off by looking at one of the groups here that led the market higher. You just talked about oil getting into a bull market, and here we go. Energy doing very well here. The energy index has been a pretty big part of the rally here, the way up since August. You can see how much it's gained there. Today it was up about 60 basis points at one point. This is a 1 month move, but today it was also up, leading the markets quite a bit higher here. Not as much weighting in the S&P as it used to have, of course, but still makes an impact, obviously. And then if we switch over to the next one, we got utilities, financials. These are the two that always make it in here every day because this is kind of your lens on how the markets feel about interest rates. And right now, post minutes, the WIRP expectations have gone down, so utilities have gained. Financials pretty much still flat, though, hanging in there. And then for the last one here, I got two kind of fun stocks that popped up today. Well, not so fun if you own them. Private prison stocks. We obviously had this breaking news earlier today that private prisons will shortly be no more, or at least cease to exist in the way they are now. And these two companies, Corrections Corp of America and GEO, operatives of private prisons, got crushed.
Real quickly, pretty quiet day on the government bond market, but we talk about a continuation of yesterday's trends. So a tick lower for 2-year and 10-year yields as the sort of expectations of Fed policy continue to ease.
Continue to ease. And of course, the dollar declined as well. The pound was a big gainer here, jumping as the latest hard data of the UK showed once again that economy holding up better than expected after the Brexit vote. Retail sales rose 1.4% in July, and economists were looking for a gain of 0.1%. So far, if you tallied up, inflation, unemployment claims, and retail sales have all done better than feared. Now, take a look at the dollar versus the yen. It's currently below 100, and for all the chart fans out there, they will see the head and shoulder pattern there. And the pair is at the standard deviation support line, which is the neckline there. And according to Vince Signorello, who's Bloomberg's FX strategist, the next level to watch for here in dollar yen is 93.
Oliver kind of hinted at it earlier, but oil on a tear. It's up 30% of the year, and it was just it felt like just a few days ago we were talking about the oil bear market. Well, now it's back in a bull market, up 22% from its lows at the very beginning of the month. It's just amazing to me how fast the story changes, because a few weeks ago, the story was like, oh, there's all this new supply and inventory is spilling out over the tanks and everything. And now here we are, 22%.
But this
higher.
is driven by a lot of OPEC speculation.
Right. There's a lot of hope that they're going to get together and reduce some of
We saw what happened earlier this year when that speculation
That's a pretty big move on hope.
Yeah, that's true.
Well, you just need enough people to believe in it and to profit off of it and then move out of it.
Right.
All right, those are today's market minutes. Let's now take a deep dive into the Bloomberg. You can find all the following charts using the function at the bottom of the screen. I'm looking into the retail rumble here because Target sales disappointed and the company cut its full year guidance, saying that U.S. shoppers are cautious. Walmart, meantime, says the consumer's okay and boosted its forecast. Now, Walmart shares have outperformed Target, and you can see it reflected in their relative valuations. This line is a ratio of Walmart's PE to Target's PE. So when the line goes up, Walmart's premium to Target is increasing. And what you're seeing right now is that Walmart shares are trading near a 20% premium to Target's shares. That is the highest in more than 4 years. You got to go all the way back to early 2012.
A good reminder how each has its own issues, and the category can't look at.
And listen carefully when someone says, yeah, the U.S. consumer is cautious.
And I might add that Walmart, even though that high up over Target in the PE, is still trading at about 17, which is below average.
Good point.
I'm looking at initial jobless claims as I do every Thursday, and I've shown this chart a million times, but I love it so much, and it keeps improving. The white line is non-seasonally adjusted claims. The dotted line is the 52-week moving average, really smoothing it out to get broad trends. Another post-crisis low on this measure. We just don't see any signs of labor market weakness on the high frequency.
Is it going to be a bigger deal when the line starts to move up, or a bigger deal when it continues falling?
It's just, I don't know. I mean, eventually it will, and it just, it's ticked up from time to time, but the degree to which that is really astounding.
It's so consistent, right?
Yeah, I think it's pretty amazing.
It looks like the world's most boring roller coaster.
Yeah. Good boring.
Right. All right, I'm going to look at my chart from Battle of the Charts that lost, but I'm going to double down on it. It's looking at R&D, research and development in the S&P 500. We're coming to a close in earnings, so I think this is kind of a cool way to break it down. I built this chart out with the help of my colleague Kevin Kelly in Bloomberg Equity Fundamentals. This is basically looking at what happens when companies aren't spending as much money on CapEx, what happens when their profit margins are falling, or rather what we can kind of garner from this, where the bottom bars there are basically showing you profit margins getting thinner and thinner. So this is a normalized chart back to 2014, so we're looking at a percent change. Profit margins have shrunk by 14%. CapEx has pretty much been flat over this period, but yet one thing has expanded quite a bit, and it's research and development. So basically what Kevin is telling me is that this does show up sort of on your balance sheet, so that's going to take away and eat away at profit margins. But for all those people out there that say companies don't spend anything on CapEx, maybe they'll be reassured by the fact that they sure are spending a good bit on research and development.
It's a good sign. All right, Ward McCarthy, Chief Financial Economist at Jefferies. He joins us now. Ward, thank you. We have a bit of a rally here, not huge, post those minutes. What did you learn from the Fed minutes yesterday, and is the market's takeaway that there's no particular urgency to hike rates the correct interpretation?
Well, I think that's what we learned yesterday, is that the Fed is in no particular urgent mood to start raising rates. They do seem inclined that they would like to get another rate hike in by the end of the year, but there was nothing in the minutes that suggested that it would happen as early as September. There's still a wide range of interpretations at the Fed about the state of the economy. They're still trying to figure out what, if anything, Brexit means for the U.S. And, there's still a little bit smarting, I think, from the experience they had in the spring when they thought they were going to be able to raise rates. And then, of course, a couple of developments prevented them from doing so. So they're going to take it slowly. And as Bill Dudley has said recently, the risks of being a little bit late are not as bad as the risks of being a little bit early. And I think that's still their MO.
And we also have San Francisco Fed President John Williams speaking right now in Anchorage. Some comments from President Williams. He says that inflation is well within the sight of or on track to reach the target. We're not quite there yet, but job market strength should help. And he says the new normal means only 80,000 job gain is needed per month. Ward, what does the hawkish Fed speak, or the more hawkish Fed speak this week on the heels of a fairly dovish Fed minutes from 3 weeks ago tell you about the Fed's confidence in their models and their forecasting track record?
Well, I think what the Fed is trying to do right now is walk a fine line between being optimistic about the economy, because when your central bank is optimistic, it's easier for people in the market to be optimistic. But at the same time, they're still very cautious because they do not want to derail what they have engendered here, which is a recovery that's lasted, quite a long time. And keep in mind, too, we also have Jackson Hole coming up. And it seems like the message from Jackson Hole is going to be that the Fed wants to reassess the framework that it uses for both assessing the appropriate monetary policy and implementing monetary policy. So that's another reason why I think it's a little bit difficult to decipher what their message is, because it seems like they're changing the way that they view the world and consequently how they want to affect the world.
Ward, I'm going to bring up a chart that I know you're not going to be able to see, but you don't need to see it because you know the numbers. This is basically looking at a few metrics here that obviously the Fed considers: inflation, average hourly earnings, kind of all summarized through the Bloomberg Economic Surprise Index, and they've all been trending upwards over the past year, getting closer to where the Fed wants them to be, as well as jobless claims, which have moved down and sort of stabilized at a lower level. But yet, if you look at now versus last year, the probability of a hike last year was so much higher by the end of 2015 2015 than it is right now. So is our read-through on that the Fed is just looking at markets here, or is there something we're missing?
Well, I think what has happened is that the market simply has been learning from Fed behavior. The Fed has told us that they were going to raise rates a lot faster and a lot more often than actually has occurred. And, you know, markets tend to learn by doing. So as a consequence, that's why Fed funds futures continue to price only one rate hike through the end of 2017, which in Bill Dudley's view is being somewhat complacent. But then on the other hand, a few days later, you have James Bullard come out and say that he thinks the Fed should only raise rates once over the next 2 years, which is basically telling the markets they have it right. So until the Fed comes up with a unified message, I think the markets are going to continue to trade off of past behavior, which means that the Fed will behave or implement higher rates slower than they say they will and later than they say they will.
Of course, there's a lot of skepticism out there about how effective monetary policy is in the U.S. as well as around the world. Here's what Paul Krugman, the Nobel laureate, told us earlier this week on What'd You Miss?
I think there's an accumulation of evidence that monetary policy is pretty ineffective. For a while, you know, we came into this thinking monetary policy at zero rates was ineffective. Then along came QE. Then along came negative rates, which I have to admit that I didn't think that was possible. It turns out, so we said, oh, there's all these other things that central banks can do, but it's not actually doing very much.
So Paul Krugman says monetary policy isn't doing that much. You obviously had Williams out a few days ago talking about his potential rethink of the framework. That, as you mentioned, maybe the theme from Jackson Hole, a revisiting of the framework. All these people questioning whether the approach has been correct or effective. How soon might we see these questions start to trickle through into a real shift in how policy is conducted?
Well, the trickling through has to go through the political class. If we're going to have a fiscal policy that is coherent and that is going to try to complement what monetary policy has done, then it's something that the politicians have to embrace. So obviously, therefore, nothing's going to happen this year. And depending on who is elected in November and who ends up winning the House and the Senate, there's potential for there to be some changes in fiscal policy. Both parties are talking about spending more on infrastructure, but the party policies on taxes go in opposite directions. So
right.
We really do need some changes in fiscal policy, but right now it's hard to see exactly when that can happen and what actually would happen.
Sure. All right, thanks a lot. That's Ward McCarthy of Jefferies. Much appreciated. Great conversation.
Coming up, is this still a hated bull market rally? We have the three charts showing how record highs across the U.S. stock markets are luring more investors. This is Bloomberg.
I'm Mark Crumpton. Let's get to First Word News. Hillary Clinton says the nation needs to work together to repair the bonds of trust and respect between police and the communities they serve. The former Secretary of State met with law enforcement leaders in New York City today. She told the group that the nation needs to work together to, quote, bridge our divides, not stoke more divisiveness. President Obama is set to become the first U.S. president to visit Laos. The White House announced today that the president will visit Laos and China next month. In China, Mr. Obama will participate in a summit with leaders from the world's top 20 industrialized and developing nations. He plans separate talks with Chinese President Xi Jinping. In Laos, the president will attend a pair of regional conferences. In Turkey, Kurdish rebels are being blamed for a string of bombings targeting the country's security forces. Officials say at least 14 people are dead, more than 220 others wounded. Two of the attacks were car bombings that hit police stations in the eastern part of Turkey. A third attack, a roadside blast, targeted a military vehicle carrying soldiers in the southeast. It's the sale of a lifetime if you're a student of World War II. Next month, the Normandy Tank Museum in France is selling its entire collection, some of which was used on D-Day in 1944. More than 40 armored vehicles will be up for sale. A tank may bring up to $450,000. The museum opened in 2013. It hasn't been able to draw enough visitors to stay open. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Mark Crumpton. This is Bloomberg. Oliver, back to you.
Thank you, Mark. It's been called the hated bull market, this 222% rally in U.S. stocks since 2009. No matter how high shares go, investors have doubted the resilience of global equities along the way. But now, with low volatility stocks falling to the back of the pack as technology companies and industrial shares lead the S&P 500 to all-time highs, there are some signs investors might finally be giving in. I want to start with something fairly tangible, which is actually where people are putting their money. I'm looking at short interest, and I'm looking at futures contracts on the S&P. The first panel here is looking at short interest. Now, this has got to be a huge chart for all the viewers that have emailed me over the past year and said, what's going on with short interest? It's something we've been covering so closely. Well, guess what? It's actually finally ticking down, where investors are getting a little bit more long the market, removing some of their shorts, which you can remember got to close to the highest since roughly the financial crisis. They're finally feeling a little bit more bullish about it. And at the same time, investors have actually gone long. So not only have they lowered those shorts, but this chart showed down here shows you the futures contracts about 23% more long than short. We haven't seen that in quite some time. But it's not actually just in the stock market itself. If you actually look at where investors are putting their money by asset class, there's been a little bit of variation as well. First, about a week ago, Bank of America had a report showing investors were actually selling U.S. Treasuries in favor of stocks at a pace that they hadn't in quite some time. And you can actually see a bit of favoritism for equities for the more risky investors, those that are considering high-yield bonds versus stocks. Basically, what you're looking at are shares outstanding in the SPY ETF that tracks the S&P 500 versus HYG, the high-yield bond ETF, where actually the high-yield bond flows, those shares outstanding have gone a little bit lower. If you look down here, this is the spread between the two. It's moved up quite a bit in the favor of stocks. So investors basically thinking if they're going to get long risk, they want to do it in stock market as opposed to the bond market, which we know has also been in this very long bull market. And then finally, you're basically looking at what I think is actually the most interesting sort of play, which is that on volatility, which is just so extremely low right now. We've basically had we've basically gone 30 days with the VIX trading below 15, which is not a level it's typically at. It's very low, and for that sustained period of time, it's basically the longest we've had that drought in about a year. But not only is the VIX very low, investors are actually betting that it's going to go lower. They're actually putting money into those bets where you can see these bars here. That green shaded area shows you those bars diving in, basically showing that investors at this point are betting that VIX is even going to go lower. So the takeaway here is, admittedly, this is all pretty short term. In fact, some of this data, including the short interest, might actually come out as we're speaking here, and we'll see where that goes. But at the same time, investor hesitation hasn't really disappeared entirely, where, yeah, people will say cash levels do remain high. If you follow the AA, II survey, retail investors remain pretty bearish. But overall, there's this argument that bullishness in the market hasn't really been there, but it's actually happening right now. So even with the S&P at 2,200, some of Wall Street's biggest players are now just finding stocks a little bit too tempting to pass up. This is Bloomberg.
What'd you miss? Shares of Walmart are climbing after the retailer boosted its earnings forecast for this year and posted second quarter profit that beat analysts' estimates. Meanwhile, yesterday, its rival Target cut its projections, citing a, quote, difficult retail environment. For more now, let's bring in Shannon Pettypiece, U.S. consumer reporter for Bloomberg News. So contradictory explanations here, which would suggest that Target just hasn't figured it out.
Yes, that was one of the things I was kind of trying to get to the bottom to this morning. You know, where is the consumer at? Target painted a really grim picture yesterday. Walmart saying today, I talked to their CFO, he said, well, I think the consumer's pretty stable. They're not great, but they're okay. But they hadn't seen a marked change this year compared to where things were a year ago. So it looks like it might be more of an issue of what's going on at Target and what's going on at Walmart and what they're doing right versus consumers going one way or another.
And if you come inside the Bloomberg, this was my deep dive earlier, #BTV 2844, showing how Walmart's PE valuation trades at a premium to Target's valuation, and it's at the highest in about 4 years, Joe.
Yeah, the stocks had an awesome year. What has changed? I mean, late last year, people were just so gloomy on it.
Yeah.
Obviously, the numbers today were decent, but how have investors rethought this company?
Kind of watching the stock throughout the year, the very beginning of the year, Walmart took off like a shot. When we had all these concerns about, oh my God, another recession's coming,
right.
The rest of the market was tanking. Walmart was like the one stock holding up. And so I think then it picked up a little bit of wind from investors who were looking for a safe haven.
Right.
They were reminded Walmart a safe, consistent place to go. Then we had good numbers, relatively good numbers, again, come out from Walmart in the first quarter. We saw Target and other retailers not doing so well. So if you want to be in the retail space, you know, where do you look? Walmart, again, looked like a stable place when you compare them to Target and Macy's, and now another good quarter for them. So I think investors are getting a little confidence that maybe the changes the CEO's been making over the past year or so are starting to take effect, and if not chugging along, plowing out great growth, it's stability.
Okay, so let's talk about their earnings here as it's earnings season. We've got another chart looking at their online sales, which I think are obviously in focus here as they're playing a little bit of catch up. So this is showing you second quarter, a little bit of a bump here in terms of what we're expecting, but obviously that trend in the past has been downward. So as we see that kind of curvature switch, what's going on there?
Well, it'll be interesting to see if this trend holds. A big driver of that has been more products that they're selling online. So, I mean, it sounds like basic math. If you have more products, you can have more sales, but it doesn't necessarily always translate into more customers coming. But they have almost doubled the number of products they sell online through these third-party marketplace sellers. So that's helped drive a lot of traffic to the site. And, you know, it's been a big focus for the CEO. They've gotten a lot of criticism for those sales declining, despite them spending billions. A lot of pressure on their operations there to turn things around. So I think maybe we're seeing some of that investment start to take hold as well. And we'll see even more because by the end of the year, that acquisition for Jet.com that I know we've talked about here will be complete. So next year will be a whole new year of online sales for them.
And of course, Shannon, one of the stories that you wrote today, which is one of the most read on the Bloomberg terminal, is about Walmart's crime problem. It has an out-of-control crime problem that's driving the local police crazy. Explain why that is.
Right. So I know kind of in contrast to a positive earnings quarter, but for months now, actually for years now, Walmart has really sort of been the major source of crime in a lot of communities. And I'm not talking about a small town, but I'm talking about cities like Denver, Tulsa, Long Beach, Austin. Police get called to the store multiple times a day, sometimes hundreds, even 1,000 times a year, for everything from shoplifting, kids stealing a $20 toy, a video game or something like that, to very serious violent crimes, shootings in the parking lot. There was an employee killed earlier this year by a shoplifter, shoplifters pulling knives on employees. So, I mean, sort of underlying a lot of the improvement that we've been seeing at the stores, which might be cleaner, they might be better stocked, they might be friendlier, there is still this issue of shoplifting and theft going on that, of course, costs the company billions every year.
Are local communities going to be upset that they're essentially the taxpayers have been on the hook for these shoplifting and crime that takes place at a private enterprise?
They are. I talked to a mayor in Indiana who really sort of went to battle with Walmart. He threatened to declare them a public nuisance and fine them $2,500 each time the police were called. I just saw a news article today at a community planning board in a city in Kansas, I think it was Kansas, that were raising this exact issue. We don't want a Walmart coming into town because it's going to be a drain on our police force. So I think think this is one more problem that Walmart still hasn't gotten around to. They're trying, they're making efforts, but it's an underlying factor they're weighing on these sort of positive changes they've been making elsewhere.
That is a great story. Everybody should find it and read it. Bloomberg's Shannon Pettypiece, thank you very much.
Coming up, building a new framework for globalization. We speak with Jeffrey Sachs, one of the most influential leaders in world economics. This is Bloomberg.
I'm Mark Crumpton. Let's get to First Word News. Homeland Security Secretary Jay Johnson is in Louisiana for a first-hand look at the severe flooding that's impacted the southern region of the state and the ongoing response and recovery. The federal government has issued a disaster declaration for 20 parishes. More than 70,000 people have already registered for individual FEMA assistance, and more than 9,000 flood insurance claims have been filed. Law enforcement officials in Brazil are accusing 4 U.S. swimmers of lying about being held up at gunpoint. At a press conference today, Brazil's chief of civil police says the athletes, including American Ryan Lochte, were confronted by security guards carrying guns after leaving a party in a Rio suburb. The latest developments deepen the mystery behind the circumstances that Sunday night. The Associated Press reported earlier that 2 security guards pointed guns at Lochte and 3 other swimmers during a dispute at a gas station. The U.S. withheld a $400 million cash payment to Iran as leverage. State Department spokesman John Kirby says the U.S. wanted to ensure that American prisoners were released as promised. Kirby was responding to a report in the Wall Street Journal that the U.S. wouldn't let Iran take control of the money until a plane carrying the American prisoners had left Iran. An Egyptian military court has sentenced 418 alleged supporters of the banned Muslim Brotherhood. Most were sentenced in absentia to prison terms ranging from 2 years to life for their involvement in the storming of a police station in August of 2013. The violence came after the military forcefully cleared 2 Brotherhood protest camps in Cairo, leaving hundreds dead. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Mark Crumpton. This is Bloomberg. Scarlett?
All right, thank you so much. We have some breaking news. Emerson is buying Pentair's valves and controls business for $3.15 billion. This just broke in the last 2 minutes or so. And of course, it comes on the heels of U.S. stocks inching higher to close with gains. The S&P gaining almost 5 points. The Dow Industrials adding 24 points. Really, Joe, as you said, this was a continuation of the reaction to the minutes from the Fed, the fairly dovish minutes, even as Fed officials were split on the strength of the labor market.
Right. We saw markets pick up yesterday after those minutes yesterday afternoon. We also saw yields drop yesterday, and we saw yields on government bonds continue to slip again today.
It's kind of one of those markets where things get pushed around pretty easily. Volume again, less than 6 billion shares traded hands in the U.S. So a lot of things can move in big sizes.
What'd you miss? A new kind of globalization. It's no secret that the worldwide move to open trade, investment, and capital flows has been a hot topic for decades. But this year, the issues are really back on the forefront, particularly on the U.S. campaign trail. Joining us now is Jeffrey Sachs, a world-renowned professor of economics and a leader in sustainable development. Jeffrey, thank you very so much for joining us.
Great to be with you.
Obviously, it's trade, globalization, huge topics in the U.S. election, obviously huge in Europe as well. What will it take to get people excited and supportive of the idea of openness around the globe again?
Well, the idea of trade is that you expand the pie, but if the pie is all going to a small group at the top, those who are left behind aren't too excited about trade. So we have this real problem, which is that trade is important for the world economy, but inequality in the United States has been widening, and it's been widening pretty relentlessly for the last 30 to 40 years now. And so the public's not backing trade. We also have the very odd point, obviously, that Hillary has said, I'm against TPP, Trump obviously also, but the president's still pushing it for a lame duck session of Congress. So there's a lot of behind-the-scenes maneuvering to push this thing through, even though the public is not too happy with it.
And we're all very familiar with how the globalization has created a lot of losers in the developed world, right? In the UK, across continental Europe, in the United States. What are the costs of globalization for an emerging economy? It's easy to think of that all of China or Mexico or those who have closer trade ties with the U.S., they all win. But there are losers in those economies too, aren't there?
In general, markets create inequality, and usually you need some government policy to kind of push the gaps to reduce them. So in China, which is the most spectacular economic development looked at it over a 30 or 40 year period in history, inequality has also soared during this period. So here we're looking at the trade impacts in the United States, and we point to China as saying that took away a lot of manufacturing jobs. Absolutely right. If you look at China, inequality has also widened considerably, and there's a lot of unrest and a lot of concern in China. How do we manage this as well?
So I want to go back to a sort of analogy you had that I think is very poignant, which is globalization is liked until the slice of the pie, is leaving people behind in some sense. So I'm wondering, when you talk about that slice of the pie going to a certain group of people, has that slice gotten larger in the sense that more people are getting left behind, or has it shifted in terms of there being a different type of person getting left behind, and those are the people that are reacting right now?
The world economy has grown, and actually, on the whole, aside from 2008, falling out of bed, the world economy has grown pretty well over the course of the last generation, even a little bit longer. But the inequality in the United States, and especially the winnings at the very top, the famous top 1%, are now at an unprecedentedly high share. So what's really happened is that the manufacturing jobs, the working class jobs, a lot of the people that Donald Trump is appealing to in the contested Rust Belt states that lost the manufacturing sector, those are where a lot of the losses occurred. The empirical evidence now, the research shows more and more that import competition with China really made a big difference. My view is trade on the whole can be good, but if we're in a political system that says, tough luck to you, you're being left behind, don't expect people to be overjoyed with trade. Unfortunately, that has been the political attitude through several administrations now, both Democrats and Republicans, that have said, trade's good, we want NAFTA, we want this, now we want TPP. And if you're a loser, tough. And that isn't going to sell anymore. They're still going to try to push it through in the lame duck session. I think it's a little bit disgraceful to take something so important for the American people, and where both candidates are against it. But President Obama absolutely is going to try every maneuver to get it through in what I think is not a very democratic way after the elections with the Congress that's going out of session.
You make an argument that trade is good, but that it's important to get the distribution right, that we can't have all the gains accruing to the very top. One issue with that is that it's, capital can also flee the country. Taxation is difficult when people can move money out. And so there seem to be technical issues with just the actual redistribution. But also redistributing money doesn't, say, supply meaning or make necessarily people feel good if you see your communities hollowed out by trade with China. So what actually needs to be done domestically to address the ramifications of globalization? Because just taxing people and moving money around doesn't seem like it will really solve the issues.
Well, I think it's a great point you're making. First, that capital is the mobile factor, and capital's been the big winner. And when you have international and mobile capital, which is the new world economy of the last generation, most recent years, then there's also a tendency of a race to the bottom. We got to cut taxes because they're cutting taxes. We got to cut taxes. And so unless there is some global cooperation, you end up with the Panama Files, you end up with the tax havens, you end up with some of our biggest companies, of course, basically not paying taxes because there are so many gimmicks in the tax code that you can put your intellectual property in the Caymans or in Bermuda, even though it was made in good old America in our universities, but they don't pay taxes on that anymore. So that really is a very important point. You need global cooperation. It's also true that, by the way, income distribution helps if you're trying with a struggling family. You don't mind having some easier taxes or a higher earned income tax credit or whatever it is. But it's also true that we have a particular problem also on the campaign trail this year, which is that one way out of this is higher skills, more degrees going through for a master's or a bachelor's or something. And poor kids can't do that. We have $1 trillion of debt. So the countries that have handled this best, which are the Northern European countries, they have free tuition. That was a big issue that Bernie had on the campaign trail. That also requires revenues to pay for it, though. Mm-hmm. That requires taxation. We're back to the same income distribution point that I'm making, which is if you want to have trade, which I do, you need redistribution. But if you want to have redistribution, you want to do it in a smart way. You need cooperation, and you need to be able to help skill development and so on, but that requires tax revenues. That requires somebody paying their taxes.
And it has to be a sustainable solution, too. Those solutions don't appear to be sustainable. If you're talking about, for instance, free tuition in Europe, you have an underclass of doctoral students who don't have jobs.
Well, you got to, to have an average income like we do at $50,000, $55,000 per person, that's pretty sophisticated economy. You need pretty sophisticated policies as well. So the really good performing countries invest a lot in science, a lot in technology. Where do they get the money? You better have some revenues in order to be able to do that. But in other words, you have to be able to look ahead and say, we're going to build technology, skills, jobs in a balanced way. We kind of gave up on that because we said, just let the top go for it. It's all going to trickle down. We've been hearing this for 40 years now. We've reached the end of that kind of politics, but we haven't reached a new kind of consensus, that's for sure.
Jeff Sachs of Columbia University, really important conversation. Thank you very much for joining us.
Great to be with you. Thanks a lot.
Coming up, Donald Trump banks on a big comeback. We're going to discuss his revised playbook. This is Bloomberg. I'm Scarlett Food. It's time for the Bloomberg Business Flash to look at some of the biggest business stories in the news right now. Apple has hit a major snag connecting its watch to cellular networks to make it less dependent on the iPhone. That is according to people with knowledge of the matter. The company still plans to announce new watch models this fall, touting improvements to health tracking. The updated versions will also be able to integrate GPS-based location tracking. Harley-Davidson has agreed to stop selling, buy back, and destroy so-called emissions control defeat devices. The company has also agreed to pay a $12 million civil penalty as part of the settlement with the U.S. The company was accused of violating air pollution laws by selling the engine turners. It'll contribute another $3 million to mitigate air pollution under the deal. Gawker Media's $135 million asset sale to a unit of Univision has won bankruptcy court approval. Univision has agreed to keep 95% of Gawker's employees on current terms and maintain major agreements. This is according to court papers. The sale includes all of Gawker's properties, including Jezebel and technology site Gizmodo. Flagship Gawker.com, though, is closing next week. And that is your Bloomberg Business Flash.
What do you miss? The new plan to free Donald Trump and save his campaign. Trump has tapped Steve Bannon, a former Goldman Sachs M&A banker, as campaign CEO. Bannon has been described as the most dangerous political operative in America. For more, we're joined by Bloomberg's White House editor Alex Wayne in Washington. Freeing Trump, everyone's sort of laughing at this idea that he's going to finally, Trump is going to be unshackled and say what he really thinks. Has Trump been keeping it in and not really telling us what he believes so far?
I guess we're going to get an even Trumpier Trump. Josh Green's reporting for those excellent stories on Bannon have indicated that Trump was not happy with this effort to, quote unquote, constrain him. I hadn't seen a lot of evidence of that, but apparently he felt like people were trying to tone him down or soften his edges, and he didn't like it. He's also apparently been very angry about his polling, which of course is sinking.
Question about this title, the most dangerous political operative in D.C. or in America. What is this, House of Cards? Like, who dangerous to whom? Who is this guy?
So he runs this website called Breitbart News. It's a conservative website. I personally hesitate to call it news, but that's what they call themselves. Their stories are almost without exception inflammatory, and they've long been a champion of Donald Trump. They've been writing stuff in support of his candidacy since he first came down the escalator.
Right, of course, yeah. No, I think most know what Breitbart is, but I'm wondering who here, I guess, is looking at the acquisition or the bringing on of him onto the team and saying, oh boy, we need to rethink what's going to happen to Trump. Is this actually going to pose a threat to anybody in the Clinton campaign? Is any kind of change of style here going to make Trump more potent?
Yeah, I don't think so. I don't think the Hillary campaign is too worried about this guy joining the Trump campaign. In fact, if Trump were looking for a guy to expand his appeal with blacks or Hispanics or anybody that is really supporting Hillary Clinton in great numbers, Bannon is not the guy. His website does not appeal to that kind of an audience.
So what is the Hillary Clinton campaign's response to all of these changes in the Trump campaign? I mean, it seems like they're kind of just sitting back and being passive and letting the headlines speak for themselves. But is there a way for them to be opportunistic and redirect their own narrative?
Well, I heard a saying this morning that when your opponent is committing suicide, there's no reason for you to commit homicide. But in this case, they, of course, are expecting some even more vigorous attacks from the Trump campaign, and they say they're prepared to defend themselves against those attacks. They've got their own array of Clinton allies on the left who think they can go toe-to-toe with Bannon and Trump.
Going back to Breitbart.com, you're talking about characterizing it even more so than it being conservative. It really has sort of a nationalist, populist bent to it. Is this an indication of what Trump is really about, that he's really of a distinctly different strain of sort of right-wing ideology than what we've seen from Republicans so far?
Yeah, Josh Green in his story described Breitbart as sort of embracing a quote racially paranoid wing of the Republican Party. There's this wing of the party known as alt-right. And I think that Breitbart is kind of they've done very well at sort of towing the line between falling into, I guess, embracing the Reddit wing of the Republican Party and staying on the edge of mainstream conservatism.
Alex Wayne of Bloomberg News, thank you very much.
Sure thing.
Coming up, the battle for wireless subscribers enters a new phase. We'll be hearing from the CEO of T-Mobile next. This is Bloomberg. I'm Scarlett Fu. What'd you miss? T-Mobile is moving once again to shake up the wireless industry. The carrier announcing today that it is switching to an unlimited-only plan for new customers. Daybreak Asia co-anchor Betty Liu spoke with T-Mobile CEO following the announcement, and she joins us now with the highlights. Once again, Mr. Ledger making headlines.
He is indeed, right? So he's basically getting rid of all these fees, so to speak, right? And overcharges and all. He did that a while ago. And just giving you an unlimited plan. It almost, guys, sounds too good to be true. And it just might be, because you have to look at the details, right? So basically what he's saying is that for a family of 4, you can pay $160 a month, and you will have unlimited, voice, data, text, and right away, Sprint came out and said that they were going to do the same thing for $160. So the devil is in the details. Do you get the same quality with that price point? And the answer is no. So if you want the same quality, there are extra fees added on. And by the way, when John Ledger tweeted out all of this, you should have seen, I mean, I don't know anyone who, by the way, doesn't have a complaint about their carrier. I don't care who it is.
Sure. Oliver just spent 2 minutes telling us his.
I could spend more.
And the tweets that were coming out on not just on T-Mobile, but AT&T, Verizon, all those guys. People don't believe, like, the proof is in the pudding. They want to see how this is really going to work.
Why? So I'm reading the story right now. Lots of T-Mobile in there, lots of Sprint. Verizon's kind of conspicuously absent. Are they to the point where they don't have to take place in these sort of bidding wars for customers?
No, no, absolutely not, because it's really, everybody. John is right in the sense that he has been gaining subscribers while others like Verizon and AT&T and Sprint have been losing. So there is no sort of sitting back at all for any of these carriers. But it's interesting you mentioned Verizon, because when I was talking to John and saying, Sprint is matching yours penny by penny, he said Forget Sprint. I'm talking about Verizon. This is really an aim at Verizon for me to grab market share against them.
Good. Want my bill to go down.
So all of this has made John and his pink T-shirt pretty attractive, right? So Masayoshi Son of SoftBank has come out on there was an article on Bloomberg where he said that he still hopes there's a merger possibility with T-Mobile, and
He's still holding out hope for that.
Yes, and so here is what John said to that.
A lot of people are looking to what they could possibly do with T-Mobile, and I would just tell them it's sort of like the DMV. Take a ticket, Moxa, and stand over there, and we'll get to you. But hey, I'm not surprised you like us. I like us too.
You know what? People who have trouble with their carriers can understand that it is an experience just like being online at the DMV. So the question there, of course, is regulators. Does Mr. Son, does he have to wait until there's a new administration in the White House? Because right now, if you are reading between the lines with Tom Wheeler at the FCC, there's no chance at all that something like that, combining the third and the fourth carrier, would ever pass through regulators.
So real quickly, you mentioned that the quality is not going to be as good. How much worse are we talking about?
It depends, right? And how much you're willing to tolerate and how much you're willing to pay. So if you want HD-like quality on your video, you'll have to pay $25 extra in order to get that, for example.
All right. Thanks, Betty. And you can catch Betty with Yvonne Mann at 7 p.m. New York time and 7 a.m. Hong Kong time for Bloomberg Daybreak Asia, which you can always watch on the Bloomberg.
Coming up, what you need to know to gear for tomorrow's trading day. This is Bloomberg.
Don't miss this German PPI tomorrow, 2 a.m. Month-over-month expectations of 0.1% change and year-over-year at a 2.1% drop.
And 2.5 hours later, Taiwan releases the final print of its second quarter GDP. In the previous reading, it was a gain of 0.7%.
And don't miss this. At 7 a.m. tomorrow, we get the latest earnings from Deere, the company involved in agricultural machinery. Analysts looking for $1.64 for the consensus estimate.
That's all for What You Missed. Thanks for watching.
We'll see you back here tomorrow.
Have a great evening. This is Bloomberg.